Happy Friday, everyone. Once again, we are data dependent. We're going to have some words on J Powell from J Hole and everything he had to say out there. We got tons of news in crypto, especially with some fraud coins doing some weird stuff going on around there. And also, we're going to take a look at the Dow as it hits critical levels of resistance. All here on today's episode of Money Never Sleeps. I am once again joined by Mr. House. Glad to have him here today. How are you doing today?
Doing well. How about yourself?
I'm doing great. It's been kind of a fun day. I don't know. I think there was a lot of things that maybe I was expecting a little bit more of. But at the same time, I think that this is probably the way that the week should probably end going into next week. Again, I will give J Webb tons of credit, saying a few episodes back that nothing's going to happen. That Powell's pretty much going to say the same thing he's been saying for months. And once again, yeah, that's what we got, right? It was a very short 14, 15-minute speech. Nothing too crazy out there. Again, nothing that he really hasn't said before. However, he did say some interesting stuff at the end. I'll quote it in a second, but I was just wondering, did you get a chance to listen to the speech at all?
No, I didn't listen to it live. I was in a meeting during the speech itself, but yeah, just hearing everyone's kind of commentary afterwards on Twitter and Discord. Yeah, just same old, same old. He's not really given any definitive move, but just retaining the same outlook he's had. So
Yeah, it's again, what did we expect, right? It's been like this for I don't know how many months we've been raising rates for 18 months or something like that now. Nah, maybe less than that. It's got to be less than that. But it's been a long trajectory of we're data dependent. We're data dependent. It seems like from everything that he said, if we don't get any news next week out of PCE, it's very likely we're in this like area of pausing these rates and could be a pause and hold situation for a period of time. And again, that's not including anything that could potentially happen between now and then that could, cause them to shift, whether it's inflation spikes and they have to raise rates or something breaks and eventually they have to cut rates. For the time being right now, though, I think that if we don't get any data that really shows, inflation going too hot from here, it's likely going to be a pause the next meeting. Again, anything can happen within the next week. I thought it was really interesting how he ended this presser, and for me, it was absolutely. I don't think the markets actually are pricing this in, or not even pricing in, but reacted to this as maybe they should. I'm going to quote it right here. As often is the case, we are navigating by the stars under cloudy skies. In such circumstances, risk management considerations are critical. At upcoming meetings, we will assess our progress based on the totality of the data and evolving outlook and risks. Based on this assessment, we will proceed carefully as we decide whether to tighten further or instead to hold policy rate constant and await further data. Restoring price stability is essential to achieving both sides of our dual mandate. We will need price stability to achieve sustained period of strong labor market conditions that benefit all. And from everyone just saying, it's kind of lackluster, nothing happened really. That's a pretty ominous way to end that presser. That was literally how it ended. And then he just walked off stage. That did not give me a lot of confidence that they're thinking of cutting rates at any point. It just seems like there's two options at this point. It's keep rates at the elevated level what they currently are, or we're going to have to progress if things do not come down in a way that we see fit.
yeah, no, I think Onimus is a really good way to put it. Like he's really just almost sucking the confidence and potential joy out of the air, just like his tone and verbiage and that. So it almost makes me wonder, what is he looking for in particular? We had that disaster in Maui and Hawaii, probably set back a good amount of FEMA budget, and I'm sure that mess with the economy in other ways that we haven't necessarily understood yet. But that aside, I wonder what's the signal that Powell and the rest of the Fed is looking for, right? Is it employment or unemployment? Are they really just looking for just consumer credit to go down? Like, what is that sticking point where they're give the high sign to, yeah, we can start cutting back on rates.
Absolutely. And I think a big part of what he said today too is that the labor market is still extremely strong, right? And that's not necessarily a good place for the Fed. It makes things harder because as we know, when unemployment rises, obviously that tends to bring inflation down, right? And it brings down the demand of goods. People aren't necessarily spending as much as they once had because obviously there's less income. I think that's something that they are looking for, and I think that since it hasn't broken yet, that's kind of something that they maybe are afraid of, right? They're like, okay, why hasn't what we've done so far had any impact on the labor markets? Is this an anomaly? Is this the first time in history that we're going to be able to see it? Is it pretty much just the supply chain issue was the problem that we saw major inflation back in 2020, 2021? Um, it's gonna give at some point. What it is, I have no idea. Again, it just seems like once again he's staying very strict to that 2% inflation goal. That's he said it again today. I don't think that until we see us in the realm of that 2% within a percentage point of it, I don't think there's anything to be cheering about. And I think it's going to be the very same message going forward with each FOMC presser that we get after they decide to hike or keep rates as is.
No, yeah, I mean that sounds about right to me. So, headed into the weekly close, what's really catching your eye? Anything you've mentioned, the Dow, you were talking about the DXY a little bit earlier today. So what are you looking into as we're heading into the weekend?
Absolutely. Let's. I'm going to pull up the DXY just because that kind of goes in line with a lot of what Powell was talking about, and I think the importance of the DXY here is whether people are going to be risk on or risk off based off his tone. And it seems like the market is uncertain. We saw that it broke 104 last night, which is a really good thing, right? Especially for bears. It just shows you that the dollar is probably going to take off. And if the dollar's taking off, that means risk assets are going to be going down. We saw that a little bit earlier today. We saw that the market had absolutely reversed, any pre-market gains that it had going into today. We saw the Dow was trading, I think, at like 104.2 or something like that, the height of it. Actually, no, it's even higher. It's at 104.4. So it had a really good day going into it. We got rejected a little bit up here, but the fact that we haven't absolutely tanked from it yet tells me that his presser isn't necessarily something that's going to change too much of the outcome of the dollar. Again, I think that we are probably going to get a break at some point, whether that was today or it's going to be something next week, likely PCE. I think that the dollar is going to take off fairly soon. I think we're just at this level where the 50 is coming up on the daily below the 200. If we get that cross, that's a golden cross. And, maybe PCE comes in not as cool as we would like it, and that just shoots us up to that 105. So the dollar's really important right now, and just the fact that his speech today didn't send it tanking like it usually does whenever we get CPI or Powell usually speaks, the dollar usually tanks because I don't know, people just don't listen to what he's actually saying. Um, yeah, it's pretty strong right now. Again, we have to look at the Dow right now, and I think the Dow is it's a bit of a fake out here, right? We're up 300 points on the day. We're at 34,397. And the reason I bring this up and why this one's more important than the Nasdaq and the S&P, I think, is primarily because we see this purple line, this thick one right here, that's going horizontally across this screen. We could see that this has been a level of key resistance in the past, right? I mean, I could just pull back. We see that every time we broke above it, we broke right back under. We just, kept hitting our head on that for months, and we did it back here, here. I mean, I'm going back to even August of, last year, 2022, almost a year ago. We just found resistance on this a ton, and we closed underneath it yesterday, and it was a pretty good close, probably the most sizable close that we've gotten in a while. And today we broke above it, and we're barely above it. I mean, 34,347 for roughly 50, like $60 above it, or 60 points. This is probably going to be a fake out. I think we might close above it, but I think this is a place right now where we're looking at, this level of support. It's probably going to turn into resistance once again. I think that since we're below it, I think we're going to hit our head on it. We might close today or barely wick above it today. Looks like we're going to find some resistance up here on that 1 hour 50 moving average. That doesn't mean much, but it seems like we're just back in this range right now, or this key level of resistance that was once support. And that's not a place you want to really be, especially if the dollar is going to be taking off. It tells me that risk assets are kind of in this place where okay, there's a good chance that these things could potentially see some more downside as opposed to upside. There's more risk, I think, because there's a lot working against it going into the end of Q3. I mean, today's the last Friday in the month of August for trading, so I think it's really interesting to see where the Dow closes today. But I think this is a bit of a fake out, or the fact that it's even this close come the weekly close. Yeah, yeah. I'm not seeing too much other than that on the Dow, or I mean the Nasdaq or the S&P. Obviously, we were a little bit green on the day. I think it's just people buying back too from yesterday. Yesterday was an absolute bloody close. After we finished our show, everything was down significantly. I believe it was like three set was it the Dow that was down like 370 or something like that at one point?
Yeah, I saw pretty much leading into closing hours and after hours, everything was just kind of getting erased that had trailed Nvidia and hadn't fallen already. So yeah, it's
Absolutely.
I mean it's almost the same with crypto. It's just a lot of chop and uncertainty as far as I'm seeing. Everyone's just trying to figure out what the next big kind of movement is. Are we heading up or down? And it's weird because that feels like that's where we've been at for months almost, right? It's just kind
Yeah.
of like this back and forth cycle, like we're playing ping pong.
Yeah, it's absolutely wild. I mean, the Dow closed negative 373 yesterday. If we look at the Nasdaq, that was down yesterday 331 points. The S&P had a big day down yesterday, down about 60. We see that they're buying back a little bit right here. However, again, this is, I mean, when you have big days when it sells off, obviously people are going to buy back. Might not be equal to what people sold off at, but every time they buy it back, they're just giving people the opportunity to sell it. I'm not saying that's financial advice whatsoever. It just seems like every time that we get to a point where it rallies a little bit, the next day we get a bearish engulfing candle, and we could just see it on some of these charts, like the S&P right here. We had a few days of rallying, red candle down. We could see that every time we get a green candle, it's followed by two red candles, pretty much. It's just the opportunity. And again, we're talking about that, playing hot potato. It's people are just don't want to be caught holding a bag, and you get one of these bad days where the market drops 3% or something like that. Uh, that's you don't want to get caught with your pants down, and I think that's why we're seeing every time shoots up, they sell these rallies. Like right now, got rejected off that 300. It was up 300 points. It's about down 10 now for the Dow. I'm really interested in seeing how this one closes because this could be really close. We'll check up on it at the end of the show again, just to keep an eye on it. But yeah, it's absolutely insane here. Um, I want to just talk about some of the stuff that's going on in crypto because while Bitcoin and everything is very fun and exciting, I think frog economics is one of the best parts of the market right now. And I don't know. Would you like to take a swing at that because you probably know better what's going on with that massive drop we saw in the good old Pepe?
Oh yeah, absolutely. No, I'm actually fairly happy because I'd closed out. I had a small moon bag Pepe left from the earlier May cycle. Just kept the percentage like, hey, come September, this thing could be worth $1. Sadly, it was not. But no, I think I sold what I had remaining, but like 2 or 3 days ago. And so yeah, yesterday, all of a sudden, well, trying to filter the values right now so I can pull up the exact transaction history. But yesterday afternoon, yeah, so it was roughly about 4 o'clock based off of what I pulled up here on Arkham. The Pepe Devs multi-sig wallet that's hosted on Gnosis sold 4% of the total supply. The wallet had previously held 6% of the total supply of Pepe. So I guess what had happened was the wallet threshold required to move assets was lowered down to 2 signatures. Next thing you know, 16 trillion Pepe coins, which is the equivalent of $16.85 million, is sent out to a burner wallet that had just been spun up like 3 hours prior. From there, gets sent out to 4 separate wallets. Two of them getting like, I think one got 425, one got 475,000, and then a couple mil a piece for the other two. But no, it's just absolutely crazy. So Pepe was trading, chopping anywhere between like 5 decimals 0.1 to 5 decimals 0.12. So the absolute definition of everyone's favorite coin. But now then it just gets absolutely decimated. I want to say it was like a 20% drop, which is like, hey, it's a shit coin. 20%. What's 20%? But at the same time, just if you've been following PEPE from its inception to now, it's just held a ridiculously strong resistance once it drops to its next resistance intervals. So I think now that it's broken that 0.06 decimal to the ninth, I think we're going to start encountering some of its original resistance points, which are closer to that 6 decimals 0.08 range.
It's so wild, dude. Like I don't even play with meme coins at all, just because there's too many decimals. I like it when they get to maybe like 2 decimal places, and that's when I'll like for altcoins I'll be really interested. But I just remember getting out of the doctor yesterday, and everyone texted me like, "What the fuck's going on with PEPE?" I'm like, "I don't know what is going on with PEPE." And then I look at the chart, and it was down like I think 14% at one time when I checked. I was like, I look at the rest of the market, I'm like, something else got to be happening. No,
Yeah, I mean,
it's
it really just started snowballing. I mean, it was sitting anywhere between like 445, $450 million market cap when I woke up yesterday. Did my DEX tools scan, and as soon as that happened, it pretty much immediately shed like 50 million market cap. Another 10 dripped off like 5 minutes later, and then it started battling. So I think all in all, it's down like 75 million in market cap, and about 1.1 million in liquidity has been sold off.
insane. And we can see it here on this chart. Again, what am I using? I'm on Binance, good old Binance right now for fucking chart data. But yeah, it looks like it put in a new low, right? It's insane. It's again, I don't anticipate these altcoins not to put in lows going forward, but I mean it just shows you that it is not alt season still. I know there's things behind this that are definitely affecting the price within itself, but we're in a liquidity war right now. I think that goes, across the board for whether people are trying to liquidate people by pushing the price up, or if people are just, trying to take as much money as they can off the table. It definitely shows here that, once people get spooked, I mean, it's pretty much game over, right? I'm not saying it is game over for PEPE, but I'm saying it's like people are willing to take out their money and panic sell. And that's part of the death spiral that we're anticipating, right? We're going to get to a point where people are saying, just buy the dip. But eventually, people are definitely going to get scared. And when they get scared, it's just going to be nonstop selling, and it's going to be really just bloody for a period of time. And you're not going to know exactly when the bottom is. And that's when you kind of know that, okay, maybe we're getting close to this bear market bottom. I do want to pull up this one comment from Ace. Looks like J-Web grew some hair. Yeah, he grew some hair. J-Web actually has a lot of hair, guys. It's all on his chest. So you never get a chance to see it. I'll see if he wants to go. We'll do a beach episode one day, and he can show you all that. We'll just have a close up of just J-Web. J-Web, if you're listening to this, I hope you're having a good time down there. But yeah, this is PEPE is really interesting to me just because I'm not in this space, and I love to see shitcoins definitely play the game up and down. But hopefully not too many people got hurt off this one. But I have a funny feeling there's definitely a good amount of people who are still holding some frog bags there.
Yeah, I mean, what's another thing just kind of interesting to note is so the PEPE multi-sig was previously the second biggest holder of its own token. The biggest holder being Binance. If you take their hot and cold wallets combined, they have just over 100 million worth of PEPE left. So after the volatility yesterday, they dropped from like 122 million to 100 million. So, not to say that that's what tips that long term shreds Binance, but no, it's just interesting to know. Like Binance, there's been rumors that they delist it. I don't know how they would get rid of all that token, like otherwise without plummeting the price. So it's like it's just kind of a weird situation to observe.
Yeah, is it going to be an FTT situation where they're just stuck holding a bag of it? Maybe, but again, it's not enough, I don't think, to hurt them. But it's definitely going to be like, fuck, man, I wish we had that $22 million when they're, I don't know, having a lawsuit that they're going to have to fight probably for the next few years. But yeah, let's move on to Bitcoin, because Bitcoin is being a bitch again right around this 26,000 level. This is absolutely insane to me. That again, it's not insane, but it's just we're at this point in the market where there's a big move coming. I know there is. And again, that's just from the wave counts. If Elliott wave theory is, accurate in determining market psychology, and we're not accounting for any price manipulation, then yes, I think there is a pretty sizable move down. And you were bringing up too that there were some liquidations that happened not too far from here, right? It was 67 Bitcoin or something like that from, was it Venus?
Yeah, it was. It looked like it was from the Venus exploit wallet. It looked like they had just over $1 million, like 67 Bitcoin. That I want to say the level was, what was it, 25,087,
Yeah.
$25,087, because I failed in the text implement like 4 times. I had to keep sending it. But I think on top of that, the other thing that I read yesterday and was pretty interesting was there were 4 Bitcoin whale wallets accumulated like $94 million worth of Bitcoin over the past week. So, that's one of those things that could be helping with that price action.
Oh yeah, definitely. It seems like someone doesn't want this move to happen, right? And just every time it gets below that 25.9, it gets like 25.8, they buy it right back up. Again, we do think that there are a lot of loans out there that are extremely unhealthy. I think that there's a lot of people who are over leveraged at this point, and for those that are maybe have some collateral, it doesn't help if Bitcoin's going down, because then that collateral, whatever token it is in, is probably gonna go down in value too, cause those liquidations to happen. No one wants to get liquidated right now. We're in an extremely tight market, but that's why we're seeing the price stick around 26, right? We don't think that it's being pushed up too much because there isn't a lot of liquidity, and you don't want to blow a lot of your load when you know that it's probably going to come down closer to that liquidation level.
Mm-hmm.
And that's what I think we're seeing right here. And as aggravating it is to go sideways, understand that when it does go, it's going to go pretty significantly. I am charting something around 23, 24K. I think that's going to be a fairly good level. I think we have some good support right around here around 24K. Worst case scenario, you go down to like maybe 23, and then I think we do see a bounce. If I'm just, let me just chart this on the, let me just leave it on the 4 hourly. Just chart this real quick. But we are in a 5 wave move, I believe. So from here, there's wave one, wave two. I don't believe we're done with wave three. I think that's going to come down a little bit more. And then wave four is somewhere around this 25.28, which has been a huge level of support in the past. I think that's going to be our resistance. And this could potentially bring us down to that 22 level. Again, this is just midterm to, a few weeks to months, the way I'm anticipating this to play out, where we finally get to some of these levels. And by months, I mean, maybe one or two. September, October is when I think that we might see around that 22K level. Uh, but it's absolutely in this place where there is definitely more room to the downside, in my opinion. I think that this is, there are waves within waves, and I think this has one more move down before we start to see some of that rally up. And the fact that we're also seeing a lot of these altcoins stay pretty sideways for the time being. Like I'm looking at Matic. Matic's been around 54, 55 cents for the past few days. BNB has just been a bitch, staying sub 220, but at the same time not going lower than 215. It just seems like everything's being propped up right now. Not necessarily a great sign, but for the most part, I think that if we look at the weekly close for Bitcoin, that's going to be just as important as seeing price action move today. Because again, the macro is going to paint the best picture, I believe, for what's happening. And again, we look at this blue parallel channel that we're sitting at currently. We can see that we broke out of it. And even though we broke out of it, I do think that we're not going to get back into this channel unless, again, some type of TUSD gets found and they, mints like $64 billion of it. I don't necessarily see this price getting back up there. I've already crossed off the 34, 35K level. I don't think we're getting to there either. But, if we keep getting these weekly closes underneath the 50 moving average, and then if we break underneath this, orange line, which has been level of support, we see it's been support here, support here, support here. It's been resistance back here. We break through this, we're under the 200 EMA. That 50 is going to be following to the downside fairly quick, right? And then that means that our 50 and our 200 are both going to be pretty resistive forces underneath this level of one support, now resistance at 25.2. That just tells me that we're probably going to have a lot of trouble pushing that price up. And again, this parallel channel, this has been one that's very similar to Matic's channel. And we see where Matic is as opposed to where it was, a year ago from today. We see that this is probably going to break down. And I'm looking at the origin of where this is, and that's roughly around that 15, 16, 15,000, 16,000, where we broke from FTX. I think that's, not saying it's going to happen today, but I think that we are on our way to at least test the origin of that. But think that if we get a weekly close, maybe it moves right before the weekly close, we get under that 25,280. That's going to give you a pretty good indication of what's to come the next few months. But again, maybe I'm getting too far ahead of myself, but the weekly close is going to be important, especially if you close below the 50 moving average. That's got to be a given. But closing below this 225, 280 will be really significant for finishing off this structure and then maybe getting a bit of a corrective move to the upside.
Yeah, no, I'm kind of here with you. I thought it was funny. I sent you the headline earlier today. I think it's been the first major outlet analyst to predict not Bitcoin breaking 1,000 by the end of 2020 or 100,000 by the end of 2024.
Yeah.
There's a Bloomberg analyst that predicted Bitcoin could crash below $10,000. Yep, there we go. Amid an economic reset, kind of factoring in what Powell said today, and then just looking at the larger macro. So I thought that was really interesting because we haven't really seen a lot of bear posting from
Not
any
at all.
sort of institutional investor or major media outlet. It's all been, here's what you can do to prepare yourself for the halving. BlackRock
Exactly.
ETF, ARC files, Ethereum ETF, and it's like, okay, come on, let's be realistic here.
Yeah, there's I don't think there's enough fucking fear out there. And that's the bad thing, right? And that's why I feel like we keep seeing these levels being tested in TradFi, and every time they get tested, they sell off because every rally is absolutely being sold off. We look at this in crypto right now. People don't want the price to go down, but at the same time, people I think are positioning themselves in a way where they know it's going to go down. It's just a matter of time. It's not if, it's a matter of when, right? I think that's the big key thing here. And this 10,000 this lines up perfectly with what I honestly anticipate Bitcoin. I think Bitcoin will close somewhere on the weekly around 11, 12,000 when it does bottom. But I do think that we are going to tap that $9,750 for Bitcoin. I think that's going to be a wick. It's going to wipe out tons of people who obviously probably were longing from that period around there, and we're going to start seeing tons of prices shoot down there, and maybe people are starting to open up shorts once again in the wrong places. I think that's going to scare a lot of people if Bitcoin goes below 10K, but honestly I think that's, given what we're working with right now, I think that the global macro outlook is probably putting us in a situation where 20,000 doesn't seem necessarily feasible, like to be the bottom of the market. I think that a lot of people have been offloading around FTX, maybe around like 15, 16K. Doesn't make sense that people who have tons of Bitcoin are going to be offloading at the bottom of the market so that retail beats them at this game. I don't believe that. So yeah, this is a really interesting post. I got to read a little bit of it beforehand. I think that everyone should go read this because this is this is probably the first publicized account of someone thinking that Bitcoin is going to go lower as opposed to go up from here. And again, as we do everything on the charts, I think that it seems more likely that we are going to see a lot more downside. And I was talking about that fear. I don't think most people are fearful on crypto Twitter. I don't see it. I don't see it necessarily in the media yet either. I think people are just not focusing on what's going on. But I do think it will get bad. And we're seeing, we're going to see these liquidity crunches. We think that China's in a serious short-term liquidity crunch right now. Whether that remains to be long-term, maybe depends on how things play out. But I don't know. I think this guy's got it right. I think we are going to see Bitcoin go below 10K in this market, and that will probably mark the bottom of the bear market. And hopefully, that sets us up for a pretty good time for accumulation in the bull market, right? It's just we got to see this play out, and we haven't even really broken from this. The worst is still yet to come. Right, this rally happened here, but where we want to go, 10K is down here at this blue line. So we definitely got, what is that from where we currently are? Somewhere around at least a 56% drop still left for Bitcoin. That's sizable. Nothing has happened yet, and we're barely fighting for an inch just to get down to that 25 sub 25 level just to see this one structure play out.
Yeah, I almost wonder. I like your take that there's not enough fear, and I feel like one almost intangible way to measure that is shitcoin activity, right? When
Yeah.
there's so much greed that people are, and I feel like that probably topped out with the Ben Eat, PSYOP, oil, that whole whatever disaster you want to call that. But no, like when people are still willy nilly, just like, ooh, 0.1 ETH, 0.1 ETH, 0.1 ETH, just, trying to see if anything will hit a 10x because they're just bored and want to make money. Like, and there's not that, ooh, I should hold on to this, or there's not a, I feel like we've seen it more so with NFTs where no one's really wanting to buy anything. People aren't really seeing the appeal, but with shitcoins, I almost feel like that urge to just almost waste ETH or just send it to some dev who's going to drop 20 more tokens by the end of the day. It's like, as long as we have that, we're still in a greed cycle.
Oh yeah, I think again we've said this on the show before too. I think that what's happened, I mean, crypto aside, I think we've become an extremely greedy population of people,
Oh
right? We want to make money as fast as we possibly fucking can without doing any fucking work. And that's very reminiscent of what happened in the 1920s leading up to the Great Depression. And I think that once we got out of, 2008, people started to make money again. We saw the tech stocks absolutely take off, and it's been up only since. I think a lot of people feel very comfortable just throwing their money blindly into things without understanding, price action or, macroeconomic outlook of what factors are going to be weighing in on the price of certain goods. Like, for example, people obviously like brands like Nike and a lot of these other companies that manufacture a lot in China. However, if you're blindly throwing money into stocks like that because you think everything's just going to be going up and you don't understand that China is probably has some of the highest levels of unemployment for people and their manufacturing is coming slowly to a halt, you might not understand that Nike stock's gonna eat shit, and that's probably why we're seeing Nike stock absolutely eating shit right now, right? So really, I think retail investors are just terrible at this, and I think it's the bigger problem is greed in itself. And even when things seem their worst, people still, for some reason, think that they can make as much money as possible without doing any amount of work, and all they got to do is just buy, and buy every fucking dip, and then hopefully you get some point where you finally do break even, and then you could I don't know, make like $4 off this entire 10-year journey of buying meme coins. But yeah, sorry, absolute rant right there. But I feel like we are an absolutely greedy society right now, whether that's just in the US, but globally too. It's been so easy to make fucking money, and I think that we need to taste a little bit of blood going forward before we can get back to those up only days.
Yeah, no, I think to quote one of the greats, if not the greatest, be greedy when others are fearful, be fearful when others are greedy. So that's definitely got me holding a lot of my cash on the sidelines because I'm seeing the greed, and I'm gonna wait until there's blood in the streets. Hopefully, find some nice DCAs or some nice bottoms, and keep a long term outlook with it.
Most definitely. I think that's a great plan. I want to finish today with total three, just because we are going into the weekly close and these are very important. Obviously, Bitcoin's at 1.0, or with Bitcoin, the total market cap's at 1.029 trillion. We'll see if that changes by the time we start the show next week. But I'm looking at total three because this is the one that's getting very close, right? Every week we close below the 200, that 50 is going to follow. The 200 is the lagging indicator. It takes 200 closes before it starts. It's an average of the past 200 closes, and that starts to move down for the red line for cheers to 50. It's 50 days that it takes into account for the average, and then it moves down. So this is definitely going to cross the yellow line before anything happens where the yellow line starts to move down significantly, right? And we already broke from this channel, and I do think that we will test the origin of this channel that we broke from. And it looks like the weekly stochastic RSI is, ready to move down again, right? Seems like there is a little bit more room to the downside, and that 300 level is really important. I think that right now we're looking at this market cap for total three. Stable coins are really fucking it up, but at the same time, we do know that it's probably under 300 billion in terms of actual altcoins that are in it by itself. With this here, though, every week we close, this is going to just keep getting closer and closer. And guys, I mean, it doesn't have to absolutely capitulate, right? Even if we get a death cross, doesn't mean it has to go down here, but maybe it does. This is the thing that's really wild about this. We have no support over here back on the weekly from 2021. This was when the bull market really took off, and we see how much it shot up. The only levels of support I see that's rock solid on this left side is 182 billion dollars. Do I think it's going to go down to 182 billion dollars right away in a flash crash? Probably not, right? But I do think that we are going to be in this channel for some period of time. And I could find us, finding some resistance on this mid blue line here within the channel because there's just no buyers. It's just sentiment is down so much hopefully by the time we're testing the bottom of this channel that we could just be kind of like in this state of flux where we're just kind of like letting this all play out. And we have this absolute long, time capitulation where we finally reach 182 billion. So I guess what I'm saying is 182 billion is going to be the bottom for total three. I think that's going to be my level of support that we might test. But I think that we are going to have to test this bottom line down here, and I mean that could take us as low as 235 billion dollars fairly. By the time we start touching this this parallel channel, I don't necessarily think we're going to get back into the 350s. I think that once we break 300, it's probably going to stay below 300 for a period of time. But yeah, I mean this death cross is getting close, and I don't think anyone's really talking about it. We can look at total two real quick. Same thing, extremely close. Obviously, this actually went perfectly down to the origin of this, so we'll see how this plays out. And then total one, this head and shoulders that we've been talking about, it's a perfect head and shoulders. It's going to break. It's below the 200 EMA. Every week that we close below this 200 EMA, that's another week that this 50 is going to cross down. And we can see that we actually are finding pretty good resistance on this weekly close already off of this 200 EMA. So if Bitcoin does decide to go down to that 23, 24 level like we're anticipating, there's probably a good chance that we're going to get some more red candles in the weeks to come. But yeah, everything looks, like the trend is to the downside. It doesn't seem like that maybe in the moment when things do go up, very fast or they drop real quick. But this market is trending in a certain way. And I think we all know that a break is coming, but this might be why we need to look at the macro, because this is telling us that this could take time, but at the same time, when it does hit, it's probably going to be fairly significant.
Yeah, no, I'm just over here twiddling my thumbs, biding my time until we see crypto start crashing. And it's not because I want to see people lose wealth or holding bags, but I just want to get better entries.
Oh, absolutely. And here's the thing. I think bears are bulls. They just like to buy a lot cheaper than most bulls.
Mm-hmm.
And right now, I've had a moral dilemma with this too, because I do think that unemployment is going to rise a lot. I think a lot of people are going to lose their jobs, which is unfortunate. Cost of living in the United States is continuing to go up, and I know that it's going to affect markets globally. There's nothing we can do. We're two young guys, and JWeb is our honorary I don't know what they call chaperones in the Boy Scouts, but he's in charge on that side, on that end.
Troop leader.
Troop leader. Yeah. What's Beverly Hills troop leader or troop? I don't know. There's some movie from the 80s. Jay Wood probably knows what it is, but he could be the troop mom. And there's it's nothing we can do. All we can do is just look at the charts, inform people, and then if the market is going to go a certain way, there is no shame in, placing your bets and securing your future, because you can't save everyone, but you can definitely save yourself and, protect your family and your future generations. This is just an opportunity that comes along every decade. It seems like, right? There's that one huge market crash where the transfer of wealth is able to fully go through, and we have the opportunity of our lifetimes. And I think that's where we are currently. I mean, we're fairly young. This could be the opportunity of our lifetimes right here. I think that's going to be the case for a lot of people. And I think people, everyone has a really good opportunity, because markets do bounce back. Even if it's not all-time highs where we saw previously, there's still tons of opportunity to make money if you get in at good entry levels. And that's the most important thing. And that's what we focus on here. So I think that's going to leave us for today. I know we went a little bit longer than we probably should have, but who fucking cares? That's the weekly close. I had a great time this week, everyone. I thank you all for being here. Give a thumbs up, like, subscribe. I think a thumbs up is a like anyways, but I appreciate giving us 2 thumbs up anyways. Yeah, if you guys can share it out, we appreciate it. Mr. House, is there anything else you'd like to leave us with today?
No, I mean, think it was a great show. Thanks to you and JWeb for letting me fill in these past few days.
It's our pleasure.
Hope I didn't absolutely botch it.
No, you've been great, dude. We're glad to have you on the team. Everyone, Ace, Randy, Bundy, Chris, I know you guys are all listening later on. Thanks for we appreciate your support. We love having you guys here. Hope you have a great weekend, and we'll talk to you soon. Take care, everyone.